Good afternoon, traders. Welcome to the webinar. Thank you for coming. This is the third webinar of the 5 free webinars that I'll be doing. So I'm glad to see so many of you in here still. So let's go. Let's start. As usual, today I'll be going through all the pairs very fast. And then at the end of that, I'll take questions from you guys. I was looking at what topic we should look at, what we should do, like any special topic today that we would do. I've done most of those topics, so I'll rather take questions on any topic that you want, and then we'll see if there's a nice topic that comes up. I'll elaborate on that. Right? So let's go. Dollar index. Remember, we're saying and we keep insisting it's downtrend. I posted this before. It's coming down, and we're likely coming to retest this low. So in the 4-hour, we're coming down very nicely. At some point, I said, if you're in my trade, in my room, you'd know. I told my traders, once they do this, look for a correction. So what I think they're doing right now is they're making some kind of a lower level correction. I don't think it's going to be this huge, but it could be about this size or about this size. Not the big one, the smaller ones, right? So we may get a correction up here, and then I'll be anticipating a move down. So if we get a corrective structure from now to Friday, we will get one more impulse to the downside. What if it's reversing? Let's just assume for a second. This is wave analysis. If you base your analysis in wave, we're in a corrective structure. And these corrective structures have many different ways they can develop, right? And one of the way this could develop is this wave, having broken this low, could go back all the way to the top and then come down, right? That's a possibility. It really exists. And it's part of the wave structure that could happen. Now, what would we do if that is going to happen? Nothing. We don't have a buy or a sell setup if that happens. We would look for a sell setup if it corrects. If it goes up very sharp, we may even get a buy setup on a lower time frame, which means it will have to make an impulse. We're not jumping into that impulse. We're not crazy people here. We're not jumping around crazily buying because we see a candle move up. We will wait for a correction, and we will buy the next impulse. We get an impulse, we wait for a correction, and we sell the next impulse. It's easy. I've been telling you guys to do this over and over and over from the very first webinar that I did. And I'll repeat it. We look for an impulse, we look for a correction, and then we look for our next impulse. See? It's that easy. I repeat this every time. Here is the problem. It's easy when I show you. When you go in this chart and you try to figure it out, you can't tell where the head is from the tail is. And that is why you need somebody to train you. My traders finish the course and they are still training, and some of them still find difficulty figuring out some charts because it is not that easy. Everything is easy when someone who knows about it shows you it. You guys ever watch a doctor do an operation? Looks pretty easy, right? He just goes in, does what he has to do, come back, stitch it up, and that. Hey, I could do that. I mean, give me a knife, I could cut. Looks easy, right? It looks easy, but it's not easy. So anytime you look at somebody doing something who's got the experience and the knowledge on how to do it, it looks as if that is very, very easy to do. Right? You need to train yourself to do it. That's all. That is why we have a training course. We don't have signal service. We have a training course. We train you to be traders. And I will repeat over and over again today more than 10 times. Do not subscribe to signal service. If you're a subscriber to a signal service, save your money and unsubscribe today. You will never become a successful trader by doing that. So I'm pretty sure one or two of those guys are in here who will be trolling my charts again. And if the troller yesterday is in the room, unsubscribe from that service. It will never, ever make you a trader. And not only would it not make you a trader, you will not succeed. Your account is going to damage. You're going to lose your account if you subscribe to signal services. I get people calling me, people writing me every single day to offer them signal service. And some of you have done that in this room. Over 100 euros a month if I give them signal service. I said no. And people are like, why? It's 100 euro a month we're going to give you. You can get 1,000 students tomorrow if you open a signal service. I said no, because it will not help you. And that's 1,000 students that will be paying me every single month. My traders don't pay me that every month. My traders get everything for free for the rest of their life. Absolutely free. Because I have no intentions of making money off of them. I have the intention of training them to be good traders. And if I wanted to make money, I'll open a signal service tomorrow, and I guarantee you I'll get 1,000 people. That's a guarantee. But those 1,000 people will lose their money and pay me. I would make money from them. They will not make anything. Because even if I give them good signals, they cannot use it. They don't know how to use good signals, even if I give them good signals. I would show them perfect record, and their account is going down. So if you're a subscriber to one of those signal services, you know what I'm talking about. Be honest to yourself. You know what I'm talking about. Unsubscribe today. Save yourself the money. You're wasting your money. Now all of those signal service people can go and troll my charts if you want. I really don't care. Go ahead and do it. Let's go. Okay, let's go. So we're looking for a correction. If it gives us a correction here, like they did here, if they give us a corrective pattern, we would look for a sell again. Right? Let's go. Next one, Euro. Euro, like I said, would be the opposite of what the dollar index was doing. So the Euro buy setup was here. We decided yesterday not to take the Euro because we think Euro is not going to move so fast. Well, we were wrong on that, but we didn't lose anything because we didn't trade the Euro. What did I say? Just ignore the Euro. If you wanted to trade the Pound because the Pound had a better setup to go. And that was what happened. If you had bought the Pound here, you had a better move. It's the same move, but you had a better setup on the Pound to go. So I would have rather trade the Pound rather than the Euro. That is what I said in the webinar. Ignore the Euro, take the Pound. The same thing we are saying here again. This morning when this Pound spiked up, I told my traders not to buy. And that's because of the wave structures that we're looking at. This is the end of the fifth part of this wave structure, and I think we're going to go into deeper correction. If we get a deeper correction, we would look for a buy setup again. Simple. What if we are looking for, when should we start looking for a sell? I'll take this off. Take this off. Let me just pull this back to this low. When I get an impulse, a correction, I'm looking for another impulse. Right now, I don't have that set up. If you want to sell at the top, good luck to you. I don't do that. I'm not a gambler in here. I read the charts, and when I have a very clear vision of what it's doing, and when I have a perfect, close to perfect sell or buy setup, trade setup, I trade it. I'm going for the best trade setups there are so that I have an advantage in myself. I'm not trying to grab every single move in the market. I'm not trying to be a winner. I'm not going there to prove that I'm a winner in the market. I'm going there to make money, which means I'm going to study the chart, take my time. If I see 5 setups and 3 of them are very good, I would put my money in the 3. I don't want to take all 5 just to prove that I can win a lot of trades. I want to take 1 and make money in it. Let the 4 go without me. And if you're a serious trader, that is what you should do. If you ever want to be a serious trader and you want to make money in the market and not just post 1,000 charts every half an hour so that you can prove you have a lot of charts or that you had that one correct or you had this one correct, that's not the purpose. That's not what you're here for. If that's what you're here for, you're wasting your time and you're wasting everybody's time. So you want an insight of what we do? This is what we do. We look at the charts, and I do believe this is going to go down, but I don't have a sell setup, so I'm not going to sell it. We'll wait. We have patience. We'll wait. Diversify. If you want to diversify into something else. You can put some money into Forex. You can put some into the commodities, put some into something, buy a house with some. Plant, I don't know, invest in another business. That's diversifying. If you're buying 2 different currencies, you're not diversifying anything. You're risking all your money on Forex. So you're likely going to lose all. If you don't have a clue what you're doing, you're likely going to lose everything. That's not diversifying. That's actually you're trading the same thing, but you think you're spreading it around, right? You're just gonna lose all your money in Forex, hoping that you're diversifying into something, right? Come on, guys. When you hear people tell you something, just think about it. You know what I like to force traders to do? Think. I want you to question everything you hear. Somebody said, I like to diversify. I trade the euro yen and the pound yen and the Aussie yen. Hey, you're trading a yen pair. You're going to lose your money if you lose it. You're going to lose all the trades. One trader called me yesterday. By the way, one of the good topics I'll probably talk about today is correlation. I always say there's no correlation in the market. Zero correlation in the market. It doesn't exist. So one guy called me, said, oh, you said you wanted to look at all the yen pairs to see what it's going to do. Isn't that correlation? And I'm like, no. I'm looking at all the yen pairs to see what yen is going to do. There is a common factor there. It's called yen. And I want to see whether yen is getting stronger or whether yen is getting weaker. He said, but euro yen and pound yen, that's correlation. I said, okay, you're right. I'm not going to go into that argument. Anytime I see somebody's getting totally out of line, they don't have an idea what they're talking about, I'm not going to go into an argument. It's useless to argue with somebody who doesn't have the knowledge. Correlation is not euro yen pound yen. Correlation is you take the pound, is it correlated to the euro? Right? Not euro yen pound yen. It's pound correlated to euro in terms of its value. That's what you're looking at. If I'm looking for the yen factor, I want to see whether yen is going to get weak or whether yen is going to get strong. Then I can look at all the yen pairs. Is yen getting strong in relationship to every other currency, or is it getting weak in relationship to every other currency? And that is the way you can check the strength of any currency. It's strength in relationship to every other currency that you traded against. Basic stuff, these are very, very basic stuff in Forex, and you guys should know these stuff. That is not even wave analysis. That's so basic. And I'll prove to you guys that there is no correlation in the market. No, you don't need to say that. I mean, come on, you're not here for that. It's okay. I'm not the very best. I know there are very good traders out there. But I'm one of the traders who are trying to be honest with you and help you to understand that this thing is not what you're being fooled to believe in a lot of places. Right? It is not that, and it's not that easy. So if you believe all those hypes you're hearing all over the place, I'm trying to open your eyes to those hypes. So that when you hear a hype, question it. When somebody says, hey, I can make you a super trader, I can make you a pro trader, if you join us, you'll make 400 pips a month. 400 pips a month, even if you make it, doesn't mean your account is growing. Because you can lose all of that in 2 trades. Right? But that is what these guys don't tell you, right? So let's just go on. But eventually, I think we found the topic for today, correlation. So here's what we would look for, the Aussie. Am I looking for a buy setup? There was a buy setup. There was a small buy setup in this one in the 15-minute. And this one, if you're looking at this trade in a 15-minute, you probably had a very small buy setup here. And the buy setup will come in the break of this top. But because of this small pattern here, it's an expanding flat. I don't like the trades expansion. Most of you may not know what that means. I don't like to trade them because they're not. And then the next thing we noticed was this wave doesn't have a long life. It has 1, 2, 3, 4, 5. It's going to end. It's going to come down, and we have divergence in the chart. If you can see that, between this top and this top, we're getting divergence. So we stayed out of that. I'm not interested in these small trades. I keep telling you guys what we do in here. What we do is we look at the charts in all time frame. So let me go to the 4-hour. We look at the charts in all time frame, and we decide, do we have a move that has a potential to go, let's say, 500, 600, 700 pips? Do we have a move that has the potential to grow? And if we have such a move that has a huge potential to go, what we do is we come to the lower time frame and find an entry on a lower time frame. Now, that entry will not go all the way, but we can continue to trade in that direction with numerous entries. Every day you can come in and take a trade on that thing going in that direction because you know the direction generally it's going in. You have a sense of the bigger direction. Now, you may be able to keep one or two trades to go along for the bigger run. We have had traders who've done that. I have done it. Many of our traders have done that before. You take the first entry and you try to keep it. You survive the first pullback, you survive the second pullback, and then you're way onto your 1,000 pip. That could happen, right? No, I don't use trailing stops. I move stops when I see corrective structure. So what we saw here was that the potential of this going is not great. But if it gives us a deep pullback like this, and it's a corrective structure, we will take the next trade, pull back, we'll take the next trade until we get to the trend line. And at that point, it will have to tell us whether the whole structure has one more downside in it. That is the weekly structure. Do we have one more downside, or are we breaking out of this pattern? See the pattern here? This is your pattern. You got 1, 2, 3, you got a pullback. You got 1, 2, 3, you're getting a pullback. So the question is now, when it comes here, do we get a next 1, 2, 3 down? And if we do, any one of you who know anything about pattern could tell me what this pattern is. Right? Any one of you know anything about patterns, about ending diagonals, could immediately see what I'm talking about. So when it gets here, it will have to talk to us. It's going to break out or it's going to go down. We would be really, really interested in that trade, any direction. So right now we're interested in the upside. But we have to have a correction, which we don't have. So in a 1 hour, if we get a 1 hour correction at the top here, which is likely what they could do, we will be interested in this trade. That's it. It's that simple. Now, it doesn't mean that you're sitting waiting for all these trades to happen. While you're waiting for that to happen, there's another trade that completes the pattern and it's going down or going up. And you trade that one until this one is ready to go. I have a webinar on patterns and advanced patterns. You can look at it. It's on YouTube. Right? You can look at it. I explain everything. So New Zealand, what we are waiting for in New Zealand. Same thing. Daily. New Zealand yesterday, did we stay out of it? It was going down nicely. A lot of people thought it was a sell setup, and I said we're staying out of it because we don't have confirmation as to the direction it is going to go. And I think we did the right thing, although it go up. I think we did the right thing because you wouldn't have chosen a buy. We didn't have a buy setup, and I wouldn't have chosen a buy setup. If I had done anything that I'd be looking for a sell setup. That is why I stayed out of it. So what does the daily look like? This is the daily pattern, and this is why I think Aussie may give us one more trade to the downside. This entire structure is corrective in nature. Now, you may look at it and say, well, why does he think so? Look at this structure at the top here. See this structure? This was a corrective structure. We identified that way back. Now, this is a huge corrective structure. I don't think this one is that big. This one is a corrective structure, but it's a much smaller. It's like 1, 2, and we're going for a 3. And once we hit this level, we will be looking for downside. We've already decided that. Once they hit that level, we'll be looking for downside in the charts. Now, don't ask me why, because I'm not going to tell you why. But that's what we'll be looking for. And if we get the downside and we get a trade set up, we'll be sitting in that trade like no tomorrow. Don't ask why. Like I said, for me to tell you why that level is a long story. I have to go and teach you all the stuff I teach my traders for 6 weeks. And then you will understand why that level is important for us. Right? But just take it for now. If they break that level, we will look for a continuation to higher, right? I mean, it's not that I'm not want to say it for free, but it will be unfair to the people who paid for it. Right? Agreed? No, not because of the fib. Here's the thing you have to remember, Tobias. If it was because of the fib, I would have taken the fib out. Come on, guys. Don't be so simple. If it was because of the fib, I would have taken the fib out. You would have never seen the fib there. It's not because of the fib. But anyway, good try. Let's go. So we're looking at this structure. It's more about a structure. We're looking at this structure going up, and we believe this structure may terminates here, and then it starts going down back. So if that happens, we will be looking for a sell setup for a big trade to the downside. Now, let's talk about a trade for today. Trade that you guys want. It's a trade to the upside. Since we say we can go to that level, it means there's a possible buy setup may happen, right? So you may get a possible buy setup in here, and you may get a trade to the top there. So if you get this, you can take this trade. That's a trade of the day. When you hit that area, move your stop very, very tight or take off the profit. because there is an area from where it could turn. That is an area from where it could turn. Yen. Yen yesterday, remember, we said downside, it broke, it's going down. We're looking at this pattern. Now, I don't think this is going down to retest this low as yet, right? Because two things could happen right now. Either this is the first impulse to the upside and we make a correction here and then we go back up. If they're going to go down, what they have to do, all of you know that, they have to give us a corrective structure. And if they don't give us a corrective structure, we are not in the trade. You should not be in the sell on the yen. I see a lot of traders post this out. I was tempted to post the chart to say, don't sell it. But then I decided no, because there's some traders who for some reason are trying to copy my style. Not that they understand what I'm doing, but they're trying to copy my style, thinking that this is a bigger correction, right? I normally write, right, we're in a bigger corrective structure. Well, that's not true. Actually, that is not a bigger corrective structure. That is because you thought I would have put it that way, but that's not what it is. The bigger corrective structure is actually this. And this is an impulse to the downside. So my good friends who copy my charts but don't have a clue about wave structure, please don't. Okay, let's go. It is not. That's not a bigger corrective structure. We finished the corrective structure. We made an impulse. We have broken the low. We have divergence, and we may be reversing for all you know. So the advice to sell here is a dangerous advice. It is not based on wave structure. It is based on anything, on pulling two lines. It's based on pulling two lines and making a decision which is incorrect. Because you would hear me repeat day in, day out, the lines have zero value. We don't use the lines as a way to sell or buy. The lines are there. These are just drawing tools to show us where the patterns are and what the patterns look like. The lines have zero value. If you put the line in the chart, it has no value. Just remember these things. It has no value. I'm not putting that line because that line should tell me whether it's a buy or sell, whether it should bounce from here or all of that. That's not the purpose of the line. The line is just a purpose to outline the pattern to me, to let me know what type of pattern I'm looking at. That's all. It's like drawing. You see some things and you want to pull a line across it to see, is it a straight line? It's like you have some dots. Think of the chart as this. You have some dots here. You don't know, are these dots going to give you a straight line or not? What do? You take a tool and you draw. Is it a straight line or not? Now, this is what you call data. This is statistical data. The line is just to give you an indication as to what it's doing. The line has zero value. The data is what has value. And if you're traders, you should learn that. That what we are trading is the data, the statistical data. We're not trading the lines. We're reading the data to see if we have patterns that repeats themselves over and over and over. And if those patterns repeats themselves every time and behaves the same way every time, or 90% of the time, then we trade them. Viewer 1042, you're the first time. You're probably in the first time in my webinar. If you said it, you probably weren't even in my webinar yesterday if you're talking about false breakout. So we're not even going to go into that. Watch yesterday's webinar and you'll know what I mean by false breakout. I don't manage a hedge fund, viewer 1104. If you're trying to be smart, you're dumb. I don't manage a hedge fund, and I never said I did. So please don't make assumptions. I trade for an investor. That's not managing a hedge fund. That's my dream come true if I can manage a hedge fund. That's what we do every day. That's what we do. Wave theory trading daily. We trade every single day. And that is what you guys shouldn't do. Don't quote people if you don't know what if you don't know the facts. Don't do that. It's dangerous. It's not a good thing to do. If you don't know the facts, don't spread the news. So let's go. Yep. And there is a chance that right in this area it could make a corrective structure. And if it does, we will be looking for upside. If it's going to go down, then it's easy. Wait for a corrective structure here and then get your sell. You're not supposed to be buying and selling right now. If you do that, you will get lucky every now and then. In the long run, you're going to lose your account. right? In the long run, you're going to lose your account if you're buying and selling at areas that you don't have a setup to know. I don't care what strategy you're using. This is not an indicator that is going up, as well as not an indication that is going down. If you understand patterns that repeat themselves, you will know that you have no clue what it's doing right now. You have to wait for a pattern. We don't have a pattern. US CAD. Remember what we said about the CAD yesterday, because we were out of the trend. We were out of the downtrend. Let me just redraw that line for you guys. We were out of the downtrend, and we were out of this trend. We were somewhere here. And I said they either have to come back within one of these two trends before I decide that we will change it. So now it looks like it's going down. On the bigger picture, we knew it was going down. We just didn't know how long the consolidation was going to be. This is why we knew it was going down, because we broke the structure. Right? And once we broke that structure, we're looking for a consolidation to go. Now, this move may be short, well, not exactly short-lived, but it's probably going to make one more low here. Eventually, you are going to see this thing take off for a deeper consolidation. And then we're going to go down. It's like this. They make a move up, and then they make a deeper consolidation, then they go again. So you make a move down, you're going to make a deeper consolidation, and then you're going to go again. So if you're in the sell, it's a warning for you to take, be careful. If you're in the sell, when it breaks this low, let me just put that low there for you. Start moving your stop very close, because any point after that, it could turn. I think they may come to about this trend line area, but you don't want to take that risk of hoping that they go there. You want to move your stop and protect your capital and let it go, right? So when it comes to this low, then we will probably see a deeper correction. And I posted that chart somewhere in the weekly and the CAD, I think, and the CAD, right? I think I posted that in the weekly chart, which way it's going to go on the daily. Let me see. Or it's a 2 days chart or something like that, where we had those two options, right? One is going to come back like this, or the other one is going to go sideways and then go down. It looks like we're going to get that sideways and down. So for right now you have a short-term sell setup. And I said short-term because once it breaks the low and come to this area, you're going to be very careful, because they could turn back to go into a longer, deeper sideways move. And this is an all the CAD pairs. So I'm going to go through all the CAD pairs now, right? We're looking at CAD dollar. Let's go look at Euro CAD. Euro CAD is in this big sideways move and we're stuck in it for a long while. And that is possible. It could stay here for a while, right? We have this pattern here, and we were anticipating one more move to the upside, right? One more move to the upside. But if you notice, they're consolidating here for quite some time. So this move to the upside may just be a corrective structure. So I would not be surprised if this just break this, come to about this level, and start to go down back. This will no longer surprise me. We would look for an A, B, C structure, and we'll be going down. Now, rarely I think it's going to go down all the time, right? And break. We're not looking for a sell, right? I'm not looking for a sell, and I'm not looking to get into any sell structure. We were in this sell. We were in this buy, and if you were in that buy, you should have taken a break-even trade, because I told my traders to do exactly that. Take a break-even trade. If you're waiting for this thing here, if you still have your stop somewhere here, or if you have your stop here for the longer run movement, keep this stop. Because if you took the trade and the buy here with a stop here, keep this stop. That stop is still valid. If we break this low, they're going to make a pullback. And when they make a pullback to your entry level, you exit the trade for positive. Right? If I'm still in this room, if the webinars are still on, when that happens, I would show you how to manage it. Now, if they break this low, it means we'll be looking for an ABC, an A, a B, and a C wave structure, which could go up to this level. But once it comes back to around this area, you want to move it to break even and watch if it goes. Right? You don't want to lose on the trade. You want to get a break even if the worst happens. This is still a corrective structure. It has not changed the nature of that. So we're still looking for a buy setup. Now, if you're not in the trade, or you took off the trade for break even, or you were taken out for break even, the next trade you'll be looking for is the break of this here, and then you can take that to this level. Right? That is the level you can take it to next. Let's see what happens with this. And the PUNCAD. The PUNCAD also has a break of the bigger structure, the daily structure. We didn't break the daily structure in the euro. but we broke the daily structure on the US CAD and the pound CAD, right? It's actually the weekly structure, to be honest. So we broke the weekly structure. And what we are expecting now, just like the US CAD, is we are expecting them to make deeper consolidation. So you notice the deeper consolidation is going up. The US CAD, the deeper consolidation will go up. So the Euro CAD has that opportunity to go up as a corrective structure, and then they will all drop. What is the common factor in all of them? The Canadian dollar. So we will be paying very much attention to the Canadian dollar for the next couple months to come, because we think there may be a huge opportunity in this to come. Right? So we can check one or two more CAD if you guys want. Let me see. We have, which other CAD trades we have? Aussie CAD, we have Aussie CAD, we have New Zealand CAD. Well, there's no sense to check all of them. Let's see what this one is doing. Definitely, this trade I actually posted. By the way, here's a good example of sometimes where the trade setup doesn't work for you. You know what it's going to do, but it just doesn't work for you. So let's go. This trade here we posted. I actually in my room. I think I may have posted it on TradingView. I can't remember what time frame I posted it. That is this pattern. A 1, 2, 3, 4, 5. So all of our traders in our room said, you know what? When it comes here, we're going to sell it and we're going to sit in that thing to go down. And guess what happens? You wouldn't even believe what happened. It's still going down, but we got 2 break-even trades. And some of my traders even took a small loss on it, because this is what we did. Our first trade came in here. This breakout. It goes up. We had our stop here. It came down back. We moved to break even, and it took us out. Right? That took us out. So we said, okay, guys, this is the biggest correction. It is going to go down. Some of my traders took the trade here with a stop above here. It went down. We wanted to keep this for the long run. Remember, right? It went down. It starts to come back. Moved to break even. Took us out. That was when we said, okay, look, leave this thing alone. It's just messy. Right? So we got 2 break-even trades. And then look what happened. It's still not so easy to trade. To be honest, on a lower time frame, we should have taken that trade, put the stop above. Originally we had a stop here. But then we moved to break even. If we had just left that stop and stick around for a long while, we would have seen this coming down. Now it's not coming as aggressive as we would like it to, so I'm not really interested that we didn't get it. Because it's not, we thought it was going to be as aggressive as this move down. See, this move down went pretty sharp, right? Or this move down, right? Very sharp. Instead, it's going very slow. You notice it's going much slower with deeper pullback. And it will come to the low. It is likely going to come there. So there is still an opportunity for us to get in. And the opportunity will come here. They're consolidating. I'm watching this trend line. And I'm watching this consolidation. And a break of that. This one may be a sharp move. Who knows? We may get lucky finally. And this one becomes a sharp move. And this is trading, my friends. This is what you call trading. Not the BS you hear out there, some people jumping up, right? This is what you call trading. Sometimes you know what it's going to do by the analysis. You have a good trade set up, you get in and you get a break-even trade. Sometimes you even take a loss. Most times, like in this case, if you use good wave analysis, you use good entry, you actually get good trades and you get a break-even. It's okay. You can live with that, right? Basically. So we're looking for a sell opportunity again in this. So all the cat pairs looking for deep corrections probably sell. This one is just in one hell of a deep consolidation here, right? That's a monthly consolidation. So this thing is probably going to take a very, very, very long time to get here. And then we're going to look for that move up. It's easy to see patterns when you know what you're looking for. It's easy to see it when you know what you're looking for. So let's go. Come back. We did all the CAD. Let's go and continue what we're doing. So CAD, we finished the CAD. Swiss. By the way, Swiss was a sell setup. Did we say that? I posted this chart once showing this structure that is going to come down. And this is it. Here's the thing. You are doing a forecast way before things happen. So the assumption I made was that they're going to come to this stop and then come down. Because I'm looking at this pattern. Remember, you're dealing with a pattern. It doesn't mean price is going to do exactly that. Price did something else. They did come back to the low. They spike up to this level. They didn't get there. They went a sharp move up to that level, and then they start to drop. Did we know it's going to go down? Did we look at this pattern and said it could go down? The pattern doesn't have to go back to the top of the line. Remember what I said? The line has no value. Let me remind you of it. And this is a good example. The lines themselves has no value. They're just an indication as to where you think price could go back. The price doesn't have to go to that area. And that's not what we trade. We don't use the lines to trade. So if you see people copying lines like I put them, they're just copying. They have no idea about structure. They're just copying lines. And that is dangerous, right? So let's go. We're looking for a sell setup. Did we get a sell setup? Yes, we got it. And we finally got in this trade when I said, look for a sell here. And just because it doesn't go immediately when I said you're looking for a sell setup, it doesn't break immediately, does not mean it's not going to break. Stop freaking out on my chart. Stop posting crazy stuff. Oh, you said it's going to go down and it's going up. Wait, have patience, right? Have some patience. It will go. We'll talk about all the yen pairs just now. I think we did all the yen pairs already, right? So have patience. It will go. We were looking for this structure. We knew this structure was going to break. The mere fact that it makes some more corrections to the upside does not mean it's not going to break, right? Doesn't mean that it's not going to break immediately. Then the trolls come on freaking out. Oh, you said it's going to go down. I sold it already. Who told you to sell it? Sell it. You're not supposed to sell it until you have a sell set up, which means a breakout of this structure, and this is where your sell comes in. You jump into the trade immediately. You have a small stop. You got stopped out. You start freaking out, coming in my charts, saying crazy stuff, trolling the chart, and like really crazy stuff. We are in this, and I said again, if they give you a sell setup here, sell it. Here's what I'm going to tell you. If you're in this sell, move it to break even because we are getting internal divergence in the smaller time frame, and that means we could anticipate a much bigger correction. So my traders who were in this trade already are out of it. They got out right here for positive. Right? Basically, they got out right there for positive. So here's what we're going to do. This move may not be over as yet. There is still potential for them to come lower. We broke this low, and that means it could be over. We broke both lows. That means it could be over. So we don't know if it's over. If it is over, we'll be looking for the bigger move to the upside. I did post that in the forecast that when they finish this move, we are anticipating a move to the upside. So if we're going to get a move to the upside, we need an impulse, we need a correction, and then we're going to talk about buy setups. We don't have a buy setup. So let's see if they give us more downside or if this is all. Wait. Euro Oz. This is still a buy setup. Nothing in this chart has changed. It is still a buy setup. And the more you freak out about it, the less you're likely going to get the trade. Pay attention to the corrective structure. It will break to the upside. When it breaks, you're going to miss it because you're freaking out about nonsense and you're not looking at what you were shown. Look at what I showed you. How long did this correct before it goes? How long did this one correct before it goes? You know how many people freak out about this when we said it's a buy setup? Oh, this is a webinar they banned. Was that a webinar that was banned? I think so. Yep, that was a webinar that was banned. I posted I'm doing a free webinar, and one of the kind moderators in TradingView banned that one. They said you're not supposed to post free webinar. You're supposed to post a chart. Okay, thank you. You think it was easy? They've banned a lot of my charts, but I am not freaking about it, right? So this one took a long time. This one could take a long time. Don't worry. If you want to get this trade to the upside, if you want to get this trade to the upside, you have to understand structure. You have to understand when this structure could be over and know where and when to buy. So I get like 20 questions a day on this chart. Is it still going up? What do you think about it? Oh, it's going down. I bought already. I'm upside down. Who told you to buy? If you make this buy, if you bought here once, if you bought here for any reason, you're supposed to exit the trade here. You're supposed to be out of that trade already. This trade is not valid. Wait for the next setup, and the next setup will be a perfect one, and that will be the one that goes. one of them will go. So if you make two small trades and you lost, let's say 2%, and then the big trade goes, you're going to make 6% or 8% in that one. That is the trade that will cover for those two small entries, but you're not supposed to make the entry so early. So wait, this is still showing possible upside. There's only one reason I'll be looking for sell, one conditions in which I'll be looking when they break out of these structures here. If they're still within these lines here to the upside, that is structure, not the line. If they're still within the structures, I am still a buyer. I'm still looking for a buy setup. That is how simple it is. Let's go. Euro New Zealand. We said it was a sell setup, but we will stay out of it because of the New Zealand. Remember yesterday? So it was somewhere here we said, be careful. It may be a sell setup. We just don't like it because of the New Zealand. The New Zealand was not giving us clear signal. You could have got one trade probably, but if you didn't get it, it's okay. Now, same thing. We're not clear what it's going to do. But what we are clear of, if they break this low, we'll be looking for a buy setup after that. Once they break this low, we'll start looking for a buy setup. There may be some more sells in this. I do think there's more sells. So if this consolidates, you can look for a sell. That's going to 50. Make sure it's a consolidation. Make sure you get a breakout. Right now, it's showing a very small trade to the upside. I'm not interested in that trade. I'm interested in if they're going to go down for the bigger trade again, right? EuroCAD. Same with the EuroCAD. I think I explained this as well, right? When we did all the CAD trades. Wait for it. If it breaks to the upside, then we buy. Euro Yen. All of you remember, right? Everybody was freaking out about this when the trolls came in numbers, about 3 or 4 of them. Well, there were about 4 regular trolls. Like I call them my regular troll group. They keep trolling my charts for some reason. I don't know what I did to them. Well, I know one of them I hurt with its signal service, right? Because he didn't like the fact that I'm advising trade. But the rest, I don't know what happened, but they're trolling still. So this one is still a buy all the way to the top. And at this point, we will make the decision. Is it going to go up or is it going to go down? So you want to look for a buy setup. Yesterday, I said we may get a deeper correction. So if you were in the trade, you could have moved your stop, been taken out of the trade, and that is okay. If you're taken out of the trade, so if you were for the longer run, like I said, if you're in for the longer run, keep your stop where it is or move it to break even. That is if you wanted to go for the longer trade to the upside. But if you're going for a short trade, move your stop, let it take you out. Can everybody else see my chart? Somebody tell Greg if you're seeing the charts. I think he's the only one having the problem. Good. So what you're looking for now is we have a corrective structure here, and you're looking for a breakout in this. Don't ask me what are my strategy to buy. You should have your strategy, how you trade breakouts. We have a strategy how to trade breakout. That's not what we're going to discuss here today, but you're looking for a breakout, and we're looking for this to come to the top here, right? Wait for the setup that you're using. Wait for those rules you have for breakout trades. And when you get those rules, when everything is in line, you take the trade. What are the rules? The rules should be based on the analysis you made when you were back testing this, when you were looking at the charts, trying out 100 trades, see what's the best way to get in and all of that. If you did that work, you know how you have a strategy. If you didn't, well, then, you're not going to get it from me. Right? Let's go. We're looking for it to go up. I can give you the sense of direction we're looking for, upside. Right? Europong yesterday, I said stayed out of it, and I think we're still staying out of it. Let it come all the way to the low here, and then we'll see if they're break or they bounce. As of now, the trade is too small. It's not a very nice trade. It's looking like it's coming down right now in a 1 hour. You probably have a very short trade here. If you're very, very interested in it, this is the trade. Let me just give you, for those who are really, really interested in a short trade, it's a sell in the breakout here. This trade is very small, and your stop is going to be here, so it's not a good trade. It doesn't have the potential to go, so I'm not interested in it. When they break that structure, if and when they break that structure, the potential to go very far is there. That is when I become interested in the trade. I'm not trying to catch every little piece of trade, right? People do that for marketing purpose. You ever looked at the people who try to prove 10 pip trades, 5 pip trades, 15 pip trades? I made 15 pips today. I made 10 pips today. We did 20 trades and we got 7 pips here, 6 pips here, 4 pips there, 20 pips here. Those are for marketing purposes. It's a bad strategy to trade. Your account will not grow if you do that. I'm telling you that. It will not happen. And most of you don't need me to tell you that. You know that all by yourself. Those are marketing strategies. Posting 20 charts that could give you that. If I post this chart, it will go. I promise you, there's a very good chance that thing is going to go. But it's not interesting because you can't take the trade like that for 1-to-1 with the risk of it bouncing back very fast and taking you out. So I would not do it, and I would not post it for you to do. If it has potential to go very far, then I will post it. I post trades that has potential to go. So let's go. Pangos. We are in this cell. Let me explain this chart because everybody started freaking out. You said it break out what to do. What I said yesterday, wait for this to stop. Wait for it to make a corrective structure. Here is a corrective structure. Here is a corrective structure. Let it make a corrective structure and you buy the breakout. Look at the webinar. That's what I said, right? Now, if you jumped into this thing at the bottom here for whatever reason of your own, congratulations. You just did the wrong thing. What you should wait for is an impulsive move to tell you what it's doing. And if they consolidate here in the break, you can sell. Well, we are in the sell. We took this in our trading room. I personally was in the room when we took this. I'm not always in the trading room. I make sure I get in there so we can all take it. Give me 1 second to just get a sip of water. Thank you. So we're in that trade. What is the trade setup we're looking for? What really were we looking for? Remember I posed this chart that we're still in a downtrend and everybody starts to freak out. We're still in a downtrend. Here's the reality. We're still in a downtrend. We're in this downtrend and we're in this downtrend. The mere fact that you have a candle that came out of the trend is not the end of the trend. That's not how it works. If one candle comes out of the trend, that's not the end of the trend. The trend still continues. So there's a very high chance that this thing does this. That is the trade we're trading for. Remember I said I will take trades that has potentials to go. So we have our stop. We're in the trade already. And we're waiting to see if it goes here. If it doesn't go here, we will live with the stop. W is more to the left. Michael, did I miss something? Oh, don't worry with the counting. We're not going to discuss the counting in here. Forget about it. If it's wrong here, don't worry with that. Let's go. Pang New Zealand. Remember I said Pang New Zealand is a sell setup yesterday. It was a clear sell setup. I also posed this chart that we are still in a downtrend. You would remember because I saw one trader post these what you call them, these fancy advanced patterns saying it's going to go up. And I was like, no, my friend, we're in a downtrend. You couldn't want me to explain it better than this to you. I mean, honestly, I almost gave you as much as I can for free on this chart, telling you every single reason as to why you should not buy this, because the chart had it like this. Buy here, it's coming here. And I was like, oh my God, if any trader who's following him, thousands of traders are following him, takes that trade, they're in big trouble. They're in huge trouble. So I decide I'm going to post a chart saying, I think it's not that. You may want to reconsider. You may really want to reconsider. The power of wave analysis. That's what it is. That is what it is, my friend. The power of wave analysis. It's not about advanced patterns. Advanced patterns has nothing to do with these trades. Right? If you were putting in advanced patterns, here is where they put it wrong. If you were putting in advanced pattern, let me show you what. I can put advanced patterns, but I don't put them because they're useless if you know. It's like, how to put it? You know, if you're in university, you know the stuff in school that you did, right? You don't go back and study. You don't go back and study school stuff to give exams so that you can pass all the exams with with great grades in school. You're in university, you don't care about that. Once you know wave structure, advanced patterns is useless to you. You don't really need them. This is how it should have been. And this is your trade. That is how it should have been if you put it correctly. It was not put correctly. Oh, sorry, I didn't want to get that. I want to delete this, but it's opening the chart. Let me just go back. This is what you're going to do. See? That is what we're doing. So what should we look for? If they give us a corrective structure here, you look for a sell setup. Easy. Easy stuff. Wait for the sell setup. You have a sell setup. Wait for the sell setup. Pang Yen. We're still in the downtrend. Let me just show you. We're still in the downtrend. I post all these charts explaining that, guys, we're still in the downtrend on any time frame you look at. You look at this time frame, you look at this time frame, we're still in the downtrend. Now, if this is going to go up, remember yesterday I said they will break the trend and then we'll be interested in the trade all the way back to this level. Because once they break this trend, we are assuming they're coming back here. And there may be a buy setup in it for that reason. For that reason, if they consolidate some more here and then break, we'll be interested in that trade up. So I would love to see some more consolidation. If they break this structure without consolidating more, which means this was all the consolidation, this impulse to the upside is going to be short-lived. Going to probably come here and then start that big consolidation to go back up. You can still take the trade if you have the skill level to do it. If you don't have the skill level to do it, you may want to stay out of it, right? Because you're coming to the trend line. I would like to see a clear breakout of the trend before I decide to get involved with that trade. And it may happen because we are looking at a possibility for a bigger corrective structure all the way to the top. Let me just go back to where that top is daily. We're looking for them to probably come back all the way to this top here. That's what we're probably looking for. Let's see if we get it. If we get it, there'll be trades in it. There'll be numerous trades in it, and we'll probably get some of them. Right? Right now, you don't want to trade right into the trend line. It's possible it's going to go. You don't want to trade right into the trend line. Believe me. If you haven't learned a good lesson on that, not because of the line. The line has little to do with it. It's because of what structure does in certain areas when they go. What structure will do once they break this top is likely go here and come back down. They may even break the trend line and come back down. It's very likely, and there are a number of things in the chart that are telling us that that is possible. Right? A number of things in the chart that's telling us that is possible. EURUSD. I would like them to break. I would like the buy setup. I love the buy setup. So we're in the PUNCAD. We looked at this already. They're coming down and they're making just a bigger corrective structure, I think. Yeah, so we may see the structure go sideways. We may see them come back here and kind of like for a long time go sideways. So you can actually trade it on a lower time frame. It's tradable, right? As a matter of fact, it's easy to trade when you know where the tops and the bottoms are. So what you can wait for here is don't jump into this candle. They broke this structure. This could be a correction and they could go back up. What you want to wait for is a corrective structure to confirm the downside. You want one of this. And if you get one of that, it confirms this downside. If you get one of that here, it will confirm this downside. See? Wait until you get one of that to confirm the downside. Let's go. Fang Chief. We'll come to Cadian. I'm going slowly. I'll try to pick up now so I can go faster. And then we're going to look at this 4 hours. Fang Chief, we're still in the downtrend. Regardless of what anybody tells you or what, we're still in the downtrend. The trend has not changed. The mere fact that they broke this one, which is the smaller trend, Doesn't mean we have changed the direction of the trend. See that? What will change the direction of trend was a breakout of this trend. So what we will be looking for here, if they keep doing this, we would look for a breakdown. See that breakdown, give us a little sideways here, and we will take this trade down if that happens. I'm not interested in the buy setup until we break this trend line. Until we break that trend line, I don't have a buy setup. So I'm waiting. Maybe there is a buy setup somewhere. I don't see it. So, but if we get a consolidation in here, if they break this structure and instead of going sharp, they start to do this, and we get this structure, we'll be looking for an upside. We don't have enough information to make that decision as yet. When we have enough information in the chart that says, okay, you possibly could be looking at an upside, we will make that decision. Aussie, New Zealand, I'm going to go just a couple more and then we'll call it a day. Just stay out of it. It's going sideways. There's a setup there, but it's not ready. I'll probably show you that later. Yen, we said, look at this pair when it comes to the top there. There's a likelihood they can break out. There's a very strong likelihood they can break out. And if they break out and consolidate, you're going for a very long trade to the upside. Right now, at the very top of this trade, you shouldn't be buying it. If you were buying, you would have bought somewhere in here in the breakout of this, and the breakout of this, or in the breakout of this. Right? Any one of these breakouts here probably have been a buy setup, or even the breakout of this top would have been some kind of a buy setup. But you don't have a buy setup right now, so we'll just leave it. New Zealand yen is pretty much the same thing. Stay out of that. CAD yen. Somebody wanted CAD yen. Let's show it. When CAD yen hits that top, I remember I said that yesterday. When it hits the top, be careful. We have a lot of divergence in the chart. So if it's going to break out, and there's a likelihood it could go both ways. Remember we said this thing could go both ways. It could go up or it could go down, right? So we don't know which direction it is going to go. They have to prove one out of those directions first. Break the trend line to the upside, and I'll be interested after a consolidation. Let me make this clearly. I'll be interested after a consolidation. We finished Euro New Zealand already, right? After a consolidation, I'll be interested. So if not, I'm not interested because there's a likelihood it's going to go back down. Yep. So we will probably stop looking at charts, and we will save some time now to talk about correlation because we are actually an hour into it, right? So I think you guys have an idea of what we do and how we look at charts. We don't have to go through all the charts. S&P 500 is in 1 second, very fast. I'm just going to do it. It's in consolidation, and I actually posted that chart saying it's in consolidation, so I don't think there's a question in that. I posted this chart not very long ago, telling people it's in consolidation. Watch it when it comes to the top for breakout or for one more move down. That's it, right? Euro in New Zealand, I posted that. We did that chart already. So let's go. So today what I want to talk to you guys about, correlation. Something all traders like to talk about, that this is correlated to that or that. And the reality is far from that, right? The reality, you will watch the recording. The reality is very, very far from that. It is not correlated. And here's the thing. Which two pairs you guys think are correlated? And I will choose those two pairs to show you it's not correlated. Let's get the two pairs you think are correlated. Anybody, just post the pairs you think are correlated. Nobody can post any. Euro USD and USD Chief. Negative correlation. Okay, Aussie and New Zealand. Aussie USD and Euro Oz. Aussie USD and Euro Oz is the same thing. That's not, you're not looking for correlation so much there. But anyway, we'll go New Zealand USD and Pound New Zealand. Not correlated. Well, here, let's start with the first one. Since there are going to be so many of them, let's go Cadian. I just did Cadian. Aussie USD, Pound Oz versus Pound Oz. So here's what we're going to do. We're going to go with the first one we had, which was Euro USD and Chief. That's a simple one. That's one, two for everybody. So we can look at them. So let's go. Euro USD. Let's get a Euro USD chart out. So we have a daily chart, and I think we can add a chart onto this, right? So we can add USD CHF. Right? It's supposed to add the charts. Okay. And let's go back as far back as we can on this chart. Trying to squeeze it so we can see more of the charts. Yeah, we can. I think we can start from anywhere here. We're in the daily, so I think it's good to start at the daily. So let's see where the correlation is. This was the euro chart going what? The euro USD going pretty much like this. Where is the correlation? Come on, guys. I don't. This is so easy. I don't even have to do anything. I mean, you see any correlation? Just look at the charts, and this is what you need to do when somebody tells you something. You need to go and look at the charts. You need to look at the distance they're moving, what this was doing, what this was doing, and what they're doing right now. And you can see that they're not correlated. The mere fact that they're moving in opposite direction does not mean they're correlated. This is so easy. Even this one. Where was the correlation to this? Where was the euro correlation to that? Where is the euro correlation to what's happening here now? Here's what you need to do. Here's something you can think about that may help. Let me see if I can remove this. Do I get to remove that? Oh, that doesn't go away. Oh yeah, I can remove it now. When you hear that people say correlation, somebody's asking for Aussie and New Zealand. It's easy. Go to the Aussie New Zealand chart. And if those two pairs are correlated, you wouldn't have a chart like this. This is what you have. If they're correlated, it's mathematical. You will have a chart that goes like this, or like this. You would not have a chart that goes like this. This means there is no correlation in the chart. That is what it means. There is no correlation, because if there were correlation, you would have a straight line in the charts of the pairs. Right? It's easy. It's not something difficult to do. Take the two charts, put them on top of each other, and see whether they're correlated. Euro and pound. I actually did that one a couple of years back. There was one guy who was teaching us and was talking about correlation, and he wanted to prove. And I put the euro monthly against the pound monthly chart, and he was freaking out, because not only were they not correlated, they were actually going in the opposite direction. Right? That easy. You can do that yourself. You don't even need me to do that. Just take the charts, put them on top of each other, and see where they're correlated. And you will see that they're not. Talk about oil. You see, and that is why we are not going to do that, because now some people will feel hurt. One person wants oil, one person wants TLSA, and then somebody wants something else, because we can't do an individual chart for every one of you, right? Let's take questions that are not individual charts. Any questions we can take? We can take a couple questions that are not based on an individual chart. Anybody, any questions? After New Year's, very slow. Trading has been a bit slow after New Year's, and my trading person has been even slower, because at least for the last 2 months, because I have about 2-month-old baby, and that has been really slowing down for me. Do I speak Russian? Yes, I do. Do I use limit orders? Sometimes, rarely, but sometimes. I have a trader who loves to use them. Benny in the room. Benny is the boss for limit orders in our group. He does a webinar internally and for our group, putting in limit orders. Benny in here? Yep, Benny in here. He does that. I'm not very thing. I like to click my trades. You see, the trading room is run by traders, not by me. So they do a whole lot of stuff that I don't do. But they all follow the same analysis we use. Right? They use the very same analysis we use. That is wave analysis. They take trades. Some of them trades all those stuff you guys are labeling there, those indexes and all. They trade all those stuff, commodities and stuff. But I don't trade them. That doesn't mean you cannot trade them if you're part of the group. You can. You learn to do wave analysis. You learn to read the charts the way we do, and you can trade anything you want. Now, we're not going to discuss that. How do I identify trend break? No, that's not how we identify trend break. I can tell you that is not how we do it. I'm not going to tell you how we do it. All markets. Any chart you look at. Yes, Mark, thank you. Any chart you look at, the wave analysis work with. Do I use Fibonacci time zone in my trading? No, I don't. And remember, please, before everybody go, if you haven't signed up for the Trading View charts, please do so. Let's support them. Those guys are great. They're doing a great work. I mean, we love the charts, honestly. And I think if you get the full access to the chart and you use it the right way, it's amazing. You're gonna like it. What is the shortest time frame I go to? 15 minutes is about where the shortest I would like to go. I don't go lower than that. Fibs, is there a combination with waves? Not exactly. The fibs, we don't really combine them with waves. I have no idea how long we'll do the courses. What session do you trade? Or are you in the chart? Nobody's in the chart 24/5. I trade when I'm in front of the charts. I trade different sessions. Sometimes I'm up for Asian. Most times I'm not. Mostly it's London and New York sessions. How does the course work? I did it yesterday, but I could go through pretty fast again. No, we do 1 week. When you join the group, you can join us anytime. When you join, you get access to everything we have. You get access to all our trading rooms. You get access to our webinars. You get all the recordings of the webinars. You get access to all the traders in the room to ask questions and to post charts and to do all the stuff you want to do and to learn. You get access to the recordings of the previous courses that we did, and you can start your learning process. If there's a live class going on, you can sit in and you can listen to the traders and listen to the classes themselves. What you don't have access to immediately is the practical session, and that's very important. That's what makes you the trader. That's what makes you do what we do, learn to do it perfect. That is the training sessions. You get access to the training sessions in the next upcoming course, right? Not on the next upcoming course. That is where you get access to the training sessions. So you're actually actively a part of the group and trading from the day that you join. And then you take your course, and then you actually become really good at trading. What are my hobbies? I don't know. I like to play games, not much of physical games. I like riding horse. I don't know. I'm not really. I like swimming. What else? Every now and then I do go to the sports hall. That's like 2 months every year, 2 or 3 months every year. When it's coming to summer, then I decide, oh, it's time to go to the by the way, the gym is right next door to me, and I have the gym subscription, but I only go like 2 or 3 months a year. Yes, it teaches you everything. It teaches you everything you know to read. You need to know to read the charts. And if you want something else, we can discuss it. We also teach money management. We teach you how to strategies we use and all of that. We don't use prep range in terms of 20 and 30. Here's the thing. We put a stop where we think that structure is no longer valid. So let's assume I have an impulse. I have a correction and I'm breaking this correction. If I'm entering the trade here, I have to decide at what point if this starts to pull back, at what point it is no longer valid for me to be in this trade. And that is where I put my stop. It has nothing to do with the size of the pip. It could be 10 pips. It could be 100 pips. If I'm taking the trade, I would put my stop where that correction makes the trade no longer valid. You follow what I'm saying? And if you're trading because you're putting a standard amount of pips, you're doing it wrong. We trade all year round. We don't have anything like. Who says in the summer months the markets are horrible? What does that mean? Here's the thing: when somebody says that, what does that mean? What do you mean the markets are horrible? Don't the market moves during summer? They move. Well, that's nonsense. Those are crazy stuff they said. People say crazy stuff and they're expecting you not to question them. What does it mean that the market is horrible in summer? Explain that to me. The market doesn't move in summer. We don't have structure in summer. The market goes to sleep in summer and it wakes up back in winter. That's crazy stuff. If you're saying that a lot of traders goes on holiday in summer, that is okay. That doesn't mean that the market doesn't move. The market moves quite smooth and quite nice, and it does. Here's what you guys do. When somebody tells you something like that, let me teach you guys what to do. Find the summer month. Which are the summer months? Let's go find summer months. Let me show you guys how to learn to do things. Don't just listen to people say crazy stuff and take it for granted. Question them, and this is what you do to them. Say, where are the summer months? From where? From May, July, which months you want? Depends on where you live, right? Sorry, let me put it in the wrong place. Let me put it on top. Depends on where you live. Your summer month will be from May to about September, November. Where do you want it? Let's go September. If you're in Russia, it's like September. So what? You can't trade in this piece? What is the difference? What is the difference with this piece from this piece or this piece? That is what, put this question to him. When he says the nonsense like that, this is what you need to do. Take a snapshot of this and say, explain to me what is the difference between the winter seasons or the colder season and that summer season in there. Tell me what's the difference in the chart. This is knowledge. What we do in our group is we give you knowledge. We empower you with knowledge, not just say nonsense. Just take it. Look at any summer chart. Which chart you want me to pull up? Euro, the most tradable charts in the world. Let's go to Euro. Right? People trade more Euro in volumes except for the USD, but USD is a base currency, so we don't talk about it. Let's find the summer months and see what happens the last summer. Here, May. May is where your summer starts. And let's go to where? September. Summer in here. Oh, you don't want to trade in here? It's crazy stuff. That was going crazy. And then yes, somebody said December in the summer in the southern December is summer, right? What, you can't trade that? You are telling me you can't trade that because the charts are crazy in summer? Just do this. When he said that, immediately, what is my brain telling me? Go look at the charts in summer and take a snapshot and send him to him and ask him to explain that to you. You guys listen to things, you take it for granted, and you don't question what you listen to. You just listened to it and you said, oh, wow, that guy knows what he's saying. He's smart. He said summer you shouldn't trade. Yeah, is that so? Let me see what the chart is doing in summer. If you were trading Euro, if you sold Euro the last summer here, you made a darn lot of money, right? While they're telling you that, oh, you shouldn't trade in summer. Well, here's why they tell you that. They're marketing stuff to you. They're marketing stuff to you. That's why they tell you those nonsense. You shouldn't trade in summer. Come on. Okay, guys, I think that's enough. It really freaks me out when I hear all this nonsense. I will tell you why. I like that question, Mike. You know why? Those trolls are not very simple. There's a strong reason. And most of those trolls are the guys who are actually being affected with me being on TradingView. I will tell you guys, if you don't know, I was blocked more than once from TradingView. But every time I was put back on TradingView. Because there's some people whose signal business or some other kind of dumb business they're doing is being affected by me posting charts on TradingView and by me doing these webinars and by me exposing things like this, like the summer question, right? I just showed you. Of course, if somebody is looking at this webinar and he told you that nonsense, what is he going to say? What's wrong with this, guys? We need to troll his charts. We need to have some trolls in his charts. So you need sometimes to let people know who the trolls are because they come and they hide. You need to expose them. Like the banker who was exposed yesterday for the troll he is. He was exposed. Everybody saw that he's a troll. And if I didn't engage him, he would have been quietly posting those nonsense in my charts over and over, and nobody would notice except for those who look at my charts. And then I said, okay, let me engage you so you can expose yourself. By engaging, he exposed himself. Sometimes you have to engage them. That's it. So, okay, guys, thank you for coming. Have a wonderful day. Trade with care. Trade with care. And see all of you tomorrow. Take care. Bye-bye.